Hello investors and traders, today I'll speak about 3 dividend stocks to buy right now, great dividend stocks for receiving passive income. And let's start with the first company first today. It's Verizon Communications with a ticker VZ. We see that the current dividend yield is about 7%. Of course it's a lot and a very high dividend yield. If you look at the chart, so here last 12 years we traded in a range actually between the levels 38 and 61. Now we traded in the lower border of this range, and of course I consider it's a very good time to buy the stock. By the way, pay attention to the momentum indicator in the RSI. On the monthly time frame it's 32, so of course the stock already oversold. Let's have a look on the fundamental parameters of this company. So we see that market cap is 156 billion bucks. The amount of employees more than 100,000. In spite of instead of the valuation, we see PS ratio very low. It's 1 point now, and the P ratio, price per earning, is now less than 8. So it's the lowest value for last 5 years. So the valuation very cheap. We see the very stable revenue, and by the way the net income margin is now 16%. Of course it's for such for this sector. I remind you that this company engaged in provision of communications, information, entertainment products and service. It operates throughout Verizon Consumer Group and Verizon's business group segments. The business segments offer wireless and wireline communication service and products, video and data services, corporate networking solutions, security, and managed network services. So the marginality is 15, net income margin is 16%, and of course we see that the marginality is for the last years is growing. It grew from 12 to 16, so for me it's quite impressive. If we look the revenue breakdown, so of course most of the revenue, the consumer segment give the company 75%, the business segment about 22%, and all of the revenue the company earns in the US. Let's have a look on the dividend history of this company. So we see that the last years the company steady growing in dividends, so the dividend per share is continue to grow, and also the dividend yield also is a growing history. So the dividend yield now about 7%, payout ratio 51. It means that half of its revenue, half of its net income, the company pays as a dividend. So here I see also a room for the company even to increase its dividend payments. Let's have a look on the second company for today. Is Johnson & Johnson with the ticker J&J. So last 3 years the company traded in increasing channel. In my mind now we very close to the lower border of this channel, so I consider it's a good time to buy the stock. The dividend yield is now 3%, and of course let's have a look on the fundamental parameters. So look, market cap is more than 400 billion bucks. It's a great company, very huge company. The valuation now, the PE is 34, so it's not a cheap company. NPS also 4, so valuation not cheap. But look, the revenue is very stable. By the way, it's grow a little bit for the last 5 years. And the marginality here is very impressive. The gross margin 68, EBITDA ratio, EBITDA margin 33, and net income margin about 20%. I remind you, J&J, it's a company which engages in the research and development, manufacture and sales of product in the healthcare field. It operates throughout the following segments: consumer health, pharmaceutical, and med tech. Also its revenue breakdown, so most of it, more than half of its revenue pharmaceutical, and about 30% medical devices. Most of its revenue the company of course earn in US, but the Europe also the company earned about quarter of its revenue. We see a very nice dividend history. The dividend per share is continue to grow. It's very good sign, and of course the dividend yield for now it's about 3%. Also, if we will check its dividend, its financial position, so the amount of debt is about 40 billion bucks, but please pay attention that free cash flow about 17 billion bucks, so half of this debt the company can pay with its free cash flow position. So of course it's a very good sign, and no problems with that for J&J company. And the last stock for today is 3M. Let's have a look before it on the chart. So here in my mind it was an impulse. It was since 2010 the first wave, the second, the third, the fourth, and the fifth. Usually, by the way, the third is the largest wave in the impulse, so the probability of this draw is in my mind very high. Then look, this third wave can be drawn by this way: the first, the second, the third, the fourth, and the fifth. So impulse here finished, and then this segment I guess we may see ABC move, clean ABC move, correctional. I guess that here the wave A most probably finished, so then I'm expecting to see a bounce from this level to wave B, and the target is about 160 bucks. If we will check it fundamental parameters, we see market cap of 57 billion bucks, dividend yield around 6%, and of course 3M company, it's a technology company which manufactures industrial safety and consumer products. It operates throughout the following segments: safety and industrial, transportation and electronics, healthcare, consumer and corporate, and unallocated. So the valuation now in my mind very cheap. The P ratio is by about 10. I reminded the average P ratio for S&P 500 now is 15, and actually it's the lowest P ratio for the last 5 years. PS also less than 2. The average for S&P 500 companies is about 3. So valuation is very cheap. Here the performance, we see very stable revenue and very high, by the way, for the segment, then net income, net profit margin, it's 17%. By the way, the gross 44. So the a very stable and very strong performance all the last past 5 years. The company showed a very stable profit. And by segments, the most profitable segment is safety and industrial, and the next position is transportation and electronics. Most of course, not most, but on the first place in state of the country, the company earned revenue in the US is 43%, and the second place Asia, and Europe and Middle East is about 70% consist from the company's revenue. If we look at the dividend history, so we see that the last 5 years, 5-year company continue to increase its dividend per share, and the dividend yield itself also continue to grow. So very nice dividend policy. Also the payout ratio less than 60, so very low payout ratio. And the debt, the amount of debt is 16 billion bucks. By the way, last 4 years the amount of debt decreasing. I remind you that now we are in an environment of elevated interest rates. The Fed fund rate now is 5%, so most probably the company will pay relative to 2019 less interest. But here, of course, the interest rate was about 1%, in spite of the amount that the decreased, but the Fed fund itself increased. So most probably, I'm not sure that the interest rates, the interest payment will be less, but anyway, of course, it's a very positive sign. By the way, the free cash flow here is about 3 billion bucks. So usually the company pays dividend from this parameter free cash flow. By the way, if we see it's a full year data, so let me check the free cash flow about 3 billion bucks. So let me check one thing. I would like to see how much the company pays as a dividends. So usually, yeah, the total dividend paid is 3.3, 3.4. So if the free cash flow is very close to 4 billion bucks, so any problems with dividend payments? So generally speaking, 3M company, another company with a very high marginality, high dividend yield, and I don't see any problems with that for 3M company. And another company like a bonus, so its target, look, the dividend yield is 2.6%. Let's have a look, quick glance on the fundamentals of this company. Market cap 73%, dividend yield 2.6%. Also what we see, the valuation now is not cheap, P 28, but the PS is less than 1, so in spite of the PS, very low valuation. Here, by the way, the marginality decreased by actually for the last 5 years it was very low, but the revenue is continue to grow, so it's generally it's okay. And let me check here we see that the dividend, nice dividend growth, that company for last 5 years continue to increase its dividend payments. So actually we consider it as a dividend, nice dividend stock that continue to increase its dividend payments. So we see that the annual dividend yield more than 4%, the payout 72, and the annualized 3-year dividend growth is more than 30%. So for me, it's very impressive. That's another reason why I put my attention on this company target. If we look at the chart now, by the way, it traded in the major support level since 2020. So by the way, we are down more than 30% from its high levels. So for me, another interesting dividend stock to buy right now. So if you like this video, of course, press the like button. Don't forget to subscribe to my channel, and see you on the next time. Bye.